What's up traders, welcome to Failure to Displace. This video we're going to take a look at EURUSD in this morning's London session with this really nice 3R setup, sweeping Asia low and New York PM session low, eventually trading up to the Asia session high. A little bit of a different entry model this morning, so do watch this video to the end just to see how I came by this analysis. Let's jump into the session now. So as always, we'll start the analysis off on the 1 hour time frame. I've already gone ahead and marked our hourly swing highs and swing lows. You can see we put in a low on Friday, which is our ultimate low here. Pulled up another swing low at this point, sell side, which is between the New York AM session and the New York PM session on Friday. We do have sell side here, which is also a new week opening gap. We'll see this on the 15-minute chart when we drop down to the 15 minutes in a moment. Buy side just above us in the form of the Asia high, New York open, New York AM high and London high as well from Friday. So those are our hourly swing levels. This one just down here is a 15-minute swing low, which is marking the New York PM session low as well. Otherwise, on our 15-minute time frame, our swing highs and swing lows are matching up nicely. Got a bullish fair value gap underneath our New York PM session swing low. So that's of interest to me because this is giving us sweeps of liquidity into a inefficiency fair value gap. We do have a 15-minute balanced price range here as well, slightly lower down in the range. So for those of you who are not fully aware, a balanced price range is where we have a bearish fair value gap. So this is these three candles here. We've got a gap in price action between candle 1, 2 and 3. Zoom in a bit. And then we have a bullish fair value gap on the opposite side. So this, where these two fair value gaps overlap, is a balanced price range. So again, really nice PD array. When price does come down to balanced price ranges, we can often see we have a pretty significant reaction. This orange shaded area is our new week opening gap. So this is giving me a bearish bias initially because this gap generally will get filled in London. So we can see we gapped lower on the open of Monday's trading. Asia has pumped up. We've currently tested the top of the new week opening gap, but we have not filled it back through again. So this area needs rebalancing. But a large bearish 15-minute fair value gap at this point, which price has been respecting prior to London opening up. And then we have sell side obviously below the new week opening gap. So I am expecting a bit of a retracement, at least to rebalance this. If we're coming down this low, then it would be nice to sweep some sell side liquidity, as I've mentioned. What I've got my eyes drawn to is also looking for optimal trade entry and premium and discount area of this pullback range. So this current leg that we are in at the moment. So anything above the 0.5 fib is in a premium. So ideally we would look for sells here, selling high, and anything below 0.5 is in a discount, which is where we would be looking for buys. So ideally we would have price retrace down here, taking some liquidity. We have optimal trade entry here, so 618 to the 66 is our golden zone, which just so happens to be right at the bottom of this sell side here as well. So we could sweep some sell side liquidity, fair value gap pretty close to that area, looking for then a retracement going higher. Alternatively, before coming down to rebalance this, price could clear through this inefficiency, taking these relative equal highs on the 15-minute time frame. So we could sweep this buy side, looking for then a reversal pattern to come lower and rebalance the new week opening gap. So those are my levels of interest essentially. I'm looking at sell side below us here or buy side here. Just to see if we get a reversal or we get a pullback into a discount area, looking for a long potential continuation, then to take out some buy side further up the range. So our trading window is going to open at 2 AM. We're going to be monitoring our macros, we're going to be monitoring silver bullet hour, and we're going to be monitoring the open of 15-minute candles as well, just to see if we're going to get triggered in at any of those key areas in time. And make sure we've got all of our indicators switched on, which we do. Let's drop to the 5-minute time frame, start scrolling through price action now and see what we get. So straight out of the gate, we have a bearish engulfing candle. So we're rejecting off that 50% level aggressively at 2 AM, the open of London. Price is driving down. So we've swept the gap time low between Asia and the London open now. So that's the Asia low that has been taken out. Time wise, we're coming up to 2:30 at this point. Wouldn't be looking for any longs in this position because we are still in a premium, and I still have the bias that this new week opening gap needs to get filled. So although we have swept Asia low, I'm not going to look for the Judas swing at this point because I do have a bearish bias bringing us down to at least fill out the new week opening gap. We are displacing lower. There we go. So we have an aggressive move, 255. So we're coming up towards the 3 AM candle. We've taken our sell side and filled the new week opening gap now. So that's interesting. We've created relative equal lows at this point with the New York PM session low. So again, before I jump into a long, I would really like to see this PM session low get taken out because at the moment, I'm viewing this as engineered liquidity. I'm always very, very cautious if price does come within a few ticks of taking out liquidity and then reverses. I do like to see it run through that liquidity. So we've just tapped optimal trade entry. Would like to see a push through to take out this New York PM session low to look for a reversal at this point. Coming up towards the 3 AM candle. So this is the open of the silver bullet hour. Perfect. So silver bullets opens, we get a really strong reaction. So drive through the liquidity levels into our optimal trade entry, just missing the top of that fair value gap. Because we've swept liquidity, I will drop to a 1 minute time frame. And at this point, we're looking for our unicorn entry model. I'm going to turn on my breaker block with signals indicator. So this is by Lux Algo. Links to all of the indicators that I'm using are down in the description below. If you're enjoying the content, don't forget to drop the video a like. It really, really helped me out. And let's carry on and see if we get the magical unicorn entry. Oh, don't want to move those. We're into bearish fair value gap. This is currently an order block. For our unicorn, we are looking for a strong displacement through this order block, leaving fair value gaps. And by displacement, we are looking for a large engulfing candle. So these smaller candles are not what I want to see if I'm looking to go long. I need to see a large engulfing candle. There's no entry at this point. We've broken back through. Right, we are displacing above the order block now. We have got an engulfing candle at that point. Time-wise, 3:15 looks to be the spot. So we swept liquidity at 3 AM, kind of consolidated at this point. We haven't broken through the order block with displacement initially. We are breaking through with a bullish engulfing candle at this point, coming to the open of a 15-minute candle. This is not a textbook unicorn entry, so I'm going to need some confirmations here that price wants to go higher if I'm interested in taking a trade long. We've obviously got a large fair value gap now created between these two candles, and obviously that is inside our breaker as well, so we'll keep an eye on this fair value gap and breaker block coming into the open of the 3:15 candle. And we've tapped that fair value gap, so that's a nice tap at 3:13. Again, I won't take an entry on this, but that does look like a nice reaction. That fair value gap's held. 3:14, still holding. 3:15, it's looking pretty good, is that, to be fair. 3:16 rejecting. So what I'm noticing at this point is we are wicking into this fair value gap, into the breaker block. It's holding really nicely. We've come into the open of a new 15-minute candle. We're kind of developing this W pattern. So what I'm thinking is if we can break out of this, this could be our high to go long, because the fair value gap is holding. So it's not the textbook unicorn entry, but we're seeing support here at this breaker block level in the open of a new 15-minute candle, having swept liquidity. Silver bullet hour. We do have liquidity above us. We've rebalanced the new week opening gap as well. We're into optimal trade entry. So I would be happy to take a trade at the break of this bullish candle's high. Stop loss is going to have to go below this low. I'm looking for 3 PD rays of support. So I've got the breaker block, I've got a fair value gap, and I've got this order block, bullish order block. These last two down closed candles here are a bullish order block. So these are my 3 PD arrays that are supporting my thesis going long into the open of a new 15-minute candle inside the silver bullet hour. I'll be looking to trade this then up to, we obviously have that 15-minute fair value gap. We've got premium levels, so we've got some liquidity here and here up into the bottom of the fair value gap. So TP1 actually would probably be at this point just over 1R, so we can get risk free as soon as. So if we break that center candle's high, I'm going as this being a W formation, left side, center, right side for a continuation higher. See what we get. Another dig in, so we've not broken that high yet. Respect of the fair value gap though, so it's building confidence. We're still holding. We are in the trade. We've closed through this bearish fair value gap now. So closed through a bearish fair value gap at that point. So you can see we did have an inversion fair value gap there. We've just closed through this slightly higher bearish fair value gap. So potentially an inversion fair value gap at that point. Again, nice engulfing candle, engulfing this whole price action. Brilliant. So price moving away nicely now. Strong again, another strong engulfing candle. So we can see that the larger candles now are the bullish candles. So that's giving me some confidence. I'm going to take 50% of the trade off when we hit take profit 1. That will make us risk free, but I'm going to leave the stop loss where it is. So I'm not going to adjust stop loss. Let's take profit 1 hit. So we've hit TP1, 50% of the trade comes off. We leave the stop loss where it is. If price does come back, because we've reduced our position size by 50%, the profit that we've taken will cancel out the loss. So this would be a net break even trade essentially. I'm going to run this now, expecting Asia high to get taken, relative equal highs that we identified. Running this for a really nice 3R trade. Keep an eye on that fair value gap that we marked. It's not aggressive price action, so there's no news on the calendar today. So this is a no news Monday morning London session after a very large move on Friday. So we can see that price action can be a little bit stagnant in these kind of sessions. So I wanted a quick TP1 and now I can just kind of rest easy and let it do its thing. Up into that fair value gap. So that would have been a sensible error. If you wanted to take a TP2 at that point, that would have been a really nice TP2. I do want to hold out though for the Asia high at this point. We are risk free anyway, so I would expect it to sweep from one side of the range to the other side of the range. So showing us a breaker block reversal pattern at this point, but I am bullish until we take Asia high. This is again using the breaker block indicator. It doesn't always show the breaker blocks where we'd want to see them, and sometimes it shows breaker blocks where I wouldn't take an entry, so you do need to use it with discretion. I've simply got it on my charts because it does occasionally help point out things that I've missed if I'm not fully focused on what's happening in price action. So that breaker block gets tapped nicely. You can see the reaction at it. Breaker block low. So we're still in the trade. Our stop loss is still at the lows. We've not moved the stop loss yet. So we do tap back into our entry. Order block. Fair value gaps just down this area as well. So we've just tapped that nice reaction at the entry point. Coming to the close of the session now, 4:49. Our breaker block again at this point. See how this holds up. Yeah, we've got the strong reaction at that breaker block for a reversal pattern. Again, a big engulfing candle coming towards the end of the trading window. Nice strong reaction here coming into 5 AM. And there we go, we eventually hit our take profit, so that's our nice 3R just after the close of the session. And really nice trade. Hope the analysis was useful for you. Really clean session this morning. Patience paid, so a lot of confluence here, having liquidity levels at optimal trade entry, sweeping into inefficiencies as well. Entry was a little bit different to the normal unicorn model, but we could see the strength of this breaker block and fair value gap area, and we did have our 3 PD arrays to act as our support for the trade idea to go long. If you found the video useful, please do give it a thumbs up. It would really help me out, and leave a comment down below as well if you've got any questions. I'll be happy to try and help you out. Likewise, if you're enjoying the content, please consider subscribing. Thanks for watching, and I'll see you again in the next video.